In the past weeks, silver has shocked the financial world. After years of trading in relative obscurity, stuck in the shadows of gold, and ignored by many investors, silver suddenly broke out. From levels in the mid-20s not long ago, it surged relentlessly, hitting $46 per ounce and waking up a market that had long been asleep. For casual observers, this move might seem dramatic enough. But for seasoned investors, this is just the first tremor before the earthquake. The kind of price action we've witnessed in recent weeks is not the end of a story. It's the beginning of a historic rally. Why do I say that? Because the forces pushing silver higher are not temporary, not speculative fads, and not isolated events. They are structural. They are deep. And they are growing stronger by the day. First, let's talk about what caused this immediate surge. One part of it was short covering. Traders who had bet against silver for months suddenly found themselves trapped as prices climbed. To avoid massive losses, they were forced to buy back silver at higher and higher levels, adding fuel to the rally. Second, retail investors began to notice. Ordinary people, from Reddit traders to everyday savers looking for inflation protection, started piling into silver ETFs, physical coins, and mining stocks. Each new buyer added momentum. And third, whispers began spreading on Wall Street. Hedge funds, commodity traders, and even some sovereign wealth funds began reallocating tiny fractions of their massive portfolios into precious metals. Even small reallocations from such big players create enormous waves in a relatively small market like silver. Now combine those three forces, shorts covering, retail excitement, and institutional whispers, and you get a powerful rally. But here's the key insight. The big money hasn't fully arrived yet. Institutions, pensions, and central banks are still only testing the waters. When they dive in, this rally won't just continue, it will accelerate. History tells us silver doesn't move gradually. It sits still, frustrating investors for years. Then, suddenly, when conditions align, it erupts like a volcano, often doubling or tripling in months. What we've seen so far is the lava starting to flow. The real eruption is still ahead. The gold to silver ratio, a blazing signal, one of the clearest signs that silver is still massively undervalued, is the gold to silver ratio. This ratio measures how many ounces of silver it takes to buy 1 ounce of gold. Throughout most of recorded history, this ratio has averaged between 15 and 20. In other words, 1 ounce of gold was worth roughly 15-20 ounces of silver. For centuries, this ratio held remarkably steady. But today, the ratio is far, far higher, hovering above 80. That means it takes more than 80 ounces of silver to buy 1 ounce of gold. Silver is drastically undervalued relative to gold. What happens when this ratio corrects? If it simply returns to historical norms, silver prices would need to triple or even quadruple. And that's if gold remains flat. But if gold rises at the same time, which many analysts expect, silver's upside becomes even greater. This ratio is one of the most powerful signals in finance because it captures centuries of history and psychology. When the ratio gets too high, it almost always snaps back violently. And when it does, silver moves with breathtaking speed. Right now, smart investors are watching this ratio like hawks. They know silver is sitting on a coiled spring, waiting for release. And when the snapback comes, the move will be fast, dramatic, and potentially life-changing. Exploding demand, shrinking supply, Silver is unique among precious metals because it's not just a store of value. It's also an industrial powerhouse. Think about how the world is changing. Every major megatrend of the 21st century, green energy, electrification, advanced technology, medical innovation, relies heavily on silver. Solar panels use significant amounts of silver. As nations race toward renewable energy targets, solar demand is exploding. Electric vehicles require 2 to 3 times more silver than conventional cars. As EV adoption accelerates, silver demand rises with it. Electronics, smartphones, laptops, 5G towers, medical equipment, satellites, all rely on silver's unmatched conductivity. Silver is not optional in these industries. It's essential. And as these industries scale up, demand for silver is surging to levels never seen before. Meanwhile, supply is struggling. Silver mining is not keeping pace. Many of the world's richest silver mines are aging and producing less each year. New discoveries are rare. Environmental regulations are tightening. Energy costs for mining are rising. The result? A massive supply-demand imbalance. The world is demanding more silver than mines can produce. Inventories are being drawn down. Above-ground stockpiles are shrinking. This isn't just a short-term issue. It's structural. Demand will keep climbing for decades, while supply faces bottlenecks and declines. That imbalance is unsustainable, and the only way markets resolve such imbalances is through higher prices. Add to this the growing investment demand for silver as a safe haven, and you have a double squeeze. Industrial users need more silver than ever, and investors are buying it at the same time. That's a recipe for explosive price action. The dollar's decline and the Trump factor. Let's step back and look at the bigger picture. Precious metals don't just rise because of supply and demand. They also rise when faith in currencies falls. And right now, the US dollar, the world's reserve currency, is under historic pressure. US debt is spiraling out of control. Trillions are being added every year. Treasury bonds, once considered the safest investment in the world, are losing credibility. Many investors no longer see them as a safe haven. Meanwhile, countries around the world are actively seeking alternatives to the dollar for international trade. Central banks are diversifying their reserves, adding gold, and increasingly eyeing silver as alternatives. On top of that, Trump's economic policies are aimed at keeping the dollar weaker to benefit pay the debtor. A weaker dollar automatically boosts the price of commodities, including silver. So we have a perfect storm: rising distrust in the dollar, massive debt, and deliberate policies to devalue the currency. In that environment, precious metals thrive. And silver, being both a currency hedge and an industrial necessity, stands to benefit the most. Psychology and the snowball effect. Markets are not purely rational. They are driven by psychology, emotion, and herd behavior. Silver's rally is tapping into these forces in a big way. Here's how it works. Prices start rising. A few investors notice. They buy in. The price goes higher. Media outlets begin reporting on the rally. More people notice. FOMO, the fear of missing out, kicks in. Suddenly, everyone wants a piece of the action. This is what we call the snowball effect. It starts small, but gathers momentum. Retail investors start buying physical coins. Institutions shift small portions of their portfolios. Eventually, even corporations and governments join the rush. And here's the kicker: as demand grows, supply cannot keep up. That imbalance pushes prices higher. Higher prices create more attention. More attention fuels more demand. The cycle feeds itself. At a certain point, it becomes unstoppable. Not just an economic event, but a cultural and psychological phenomenon. Silver is on the verge of entering that phase. Price projections, $55 and beyond. Where is this all heading? In the short term, silver is widely expected to test $55 per ounce. That's the next major resistance level, and momentum is building fast. But the longer-term outlook is far more dramatic. Many experts believe silver is headed past $100 per ounce in the coming years. Some even argue that if the gold-to-silver ratio normalizes fully, silver could reach $150 or higher. Think about what that means. At today's price of 46, a move to 100 is more than a double. A move to $150 is more than a triple. In a world where most investments are struggling to deliver even single-digit returns, silver offers the kind of upside that can change lives. And unlike speculative assets, silver has centuries of history as money, as a store of value, and as a critical industrial metal. Its foundation is solid. The window of opportunity, the evidence is overwhelming. Silver's rally is not a temporary spike. It's the start of a historic revaluation. Prices have already surged to $46, but this is just the first spark. The gold-to-silver ratio screams undervaluation. Industrial demand is exploding while supply is shrinking. The dollar is weakening, pushing investors into hard assets. Psychology is creating a snowball effect that will only accelerate. At 46, some investors hesitate. They think they've missed the move. But history suggests the opposite. This is still early. The real wave is just beginning. The choice is clear. Watch from the sidelines as silver surges to $55, $100, or even higher. Or recognize this window of opportunity for what it is, a rare chance to participate in one of the most powerful rallies of our lifetime. Silver's journey is only starting, and the best may be yet to come. If this helped you see things differently, drop a comment and I will answer your questions. Subscribe for more honest finance content, and remember, smart money doesn't sit. It moves.